Good afternoon, traders, and welcome to the In the Zone daily ACD recap for Friday, June 3rd, 2016. In these recap videos, I go over the best ACD setups that occurred on this day. These videos are intended to show you the types of trade the ACD method offers on a daily basis. Let's take a look at what happened today, and boy, was it a lot. Okay, let me start off by saying that this morning I tweeted out that we had the possibility of a trend reversal. And this is a concept that's in the book, The Logical Trader by Mark Fisher. And if you don't have this book, please get a copy of it. Read it from cover to cover. It's a wonderful book, and there's lots to understand. And you'll understand these videos better if you've read the book and you understand what signal I'm talking about. Okay, so let me start by saying that today I had a bunch of bearish signals, okay, and none of them worked as far as the big picture goes. Okay, now there were some times when you could have gotten on board short and made some money and what have you, but the basic system failed today on a lot of different levels, and I want to go over that. I put out this morning that we had the possibility of a trend reversal, and this concept is when you get two A's in a row, or two A ups in a row, or two A downs in a row with no C's involved. The next signal goes opposite of those signals. Then that becomes a trend reversal. So if you look here, we had on June 1st an A point, an A up of 2089.41. And then the next day we had an A up of 2096.43. And they are depicted here in picture form. Okay, so here's the one and here's the other. And if you can get the third day to be an A down that's below both of these, okay, below the lowest one, that's a really good signal for a trend reversal. And that's what I was talking about this morning. So when I was putting it out on Twitter, I really wasn't 100% sure that it would even come into play, because I didn't think that they could get the A down point below the 89.41. However, we got a little bit of weakness from the opening range, and sure enough, we had our A down at 88. Okay, so now once we have it, we need to confirm it, and we did. Okay, so that was all good. But let me just say that part of the reason that I could see that this trend reversal would work is that we had a all-time high of 21.05 and a quarter. We took that out during the overnight action, and we went to 21.06. Then we got our jobs report out, and we, plummeted. So on the surface, it looks like we've got a failed breakout to the upside. The 21.05 was taken out, but it couldn't hold it. It rolls over. So we've got that aspect. Then we've got our trend reversal setting up here. This looks like it's going to reverse. Okay. And then another point, let me bring up. All right. Our macro numbers. Okay, today our number line was a 7, after yesterday's trading. 30 days ago was a -2. This -2 is also telling us that we could possibly have a down today. Okay, -2. Also, when you take away this -2, essentially you're adding 2 to this 7. So we start the day off at a +9. So we've gone from 0 to +9. All right, you have to stay at +9 for 2 consecutive days. Okay, so with the rejection up at 21.06 and the possibility of the trend reversal trade, that was kind of letting me know, hey, we hit 9, but we can't hold it, and now we're gonna reverse off of that +9, and maybe we go back to 0. Okay, so that was another factor that was factoring in to the fact that we could have this trend reversal and have a down day. All right, so let me get rid of this. Another thing that was lining up, which is normally a very good signal. Okay, it's the pivot first hour high/low. Okay, it's in the book, and it talks about if these three things line up, you're going to have a trend day. Okay, those three things are the high of the day, the first hour, has to be engulfed by the pivot range, and we have that. Okay, The next thing is you have to have a confirmed A down. Okay, we had that. Okay, before the first hour is up, we've got a confirmed A down. The next thing is you need to close within the bottom 15% of that range, of that first hour range. Here's where it gets cloudy. Okay, in the book, Fisher talks about 15%. I've heard him speak and heard him say 15 to 20%. Okay, so basically, my take is you want to see it close that first hour weak. Okay, there's like no really technical line in the sand, but I point that out because today's 15% means that we needed to close at 85 or below. We closed the first hour at 85 and a quarter. Okay, so technically you could say, well, we didn't close below 85 or below. We closed, above 15%. I don't tend to look at it like that, but you could. So here I'm thinking we have all the markings of a big Friday trend day down. We've got a failed attempt at the all-time high, 2105 and a quarter. We went to 2106 and then rolled. We got terrible jobs numbers. We're down. We get our trend reversal to 8 consecutive A ups. That's reversed by an A down. That's below the lowest A. Okay. We get our first hour pivot high that lines up. Everything is saying down, down, down. Our macro number also, we hit 9 and then that 9's getting rejected. Okay. Also, on a 30 days ago, we had a -2 day. We're getting a -2 day again today. Okay. Everything's lining up to be bearish, but that's not what happened. Now, in my eyes, this bounce was very obvious, that you're going to get this bounce. Okay. I'm still at this point thinking trend day. Okay, I'm expecting this to roll over and go down and just continue the downtrend and trend lower. However, when this bar right here closes back into the opening range, that ends it all right there. It ends it all for a lot of reasons. One thing, let me point out that this ended what I would call the A down, and also I would say it ends the possibility of a trend day. Also, up here, you can see that we confirmed the C up here, and that throws a C point into the trend reversal mixture. And so the trend reversal cannot happen now because of this C up. All right. So basically the market, in my eyes, the market played possum. They played dead. They looked like they were going to roll over and just die. It was showing lots of signs. Okay, I had lots of signals saying this thing is we're going to roll over and we're going to have a trend day down and it's going to go. But none of that happened, and actually the reverse happened. Now we started today with a +9. Okay, with this A down. Okay. And this C up, we have a +4 day. Now, again, this one is technically tough because it's just like this 15% one here was tough. We closed at the high of the opening range. You're supposed to close above it, okay, in order to get a +4. So we have the C up, and you're supposed to close, maintain that C up by closing above the opening range in order to get your +4. We closed right on the top of it. Technically, I don't know what Fisher would do in this situation, but for me, I say that's a close above the opening range, and I'm going to give this day a +4, which takes us from +9 to +13. And guess what? Monday, we're up against a 0 day. So we are going to confirm the 0 to +9 and stay there for 2 days. And that tells us that the trend is going to be up. That from this point on, you expect the market to move in the direction of the number. Okay, so we're +9, so we're expecting the market to move up. And also, But Fisher says, that if this is an immediate gratification type of thing. If the market doesn't go in our direction within a day or two, then all cards are off the table and it won't work. Okay, so I'm expecting us to rally next week because of this 0 to +9, and but we'll have to wait and see the first couple of days of the week to see if we get that follow through, to see if we get a rally next week and move on into all-time highs. Okay, so let me just state by saying I've covered a lot here. I'm not going to get into the technicals of the trades today. This A down, I would not have faded that this morning with all this negative news and me expecting it to confirm. I wouldn't have traded this one. Okay. Also, well, let me bring up the 1 minute. If you would have traded the first touch, okay, here, you had to get in front of it by a couple ticks. Okay, a couple ticks would have got you here. It did bounce almost back to the bottom of the opening range. Okay, but I wouldn't have taken this trade. Okay, and eventually it comes down and confirms the A down here. Okay, and then up here, the C point is 5% of the 30-day ADR. Okay, and so that made it 20.99 was the C up, and we confirmed that right here. Okay, and this A up doesn't matter now that you have an A. You can only have one A during the day, and we had an A down, so this you can't have an A up. Also, we try to get back above the pivot range, but we couldn't. Okay, and this kind of stayed in check, and it didn't really give the follow through that you'd like to see a late day C give. I think if it would have happened later, this happened like around 2:30. If it would have happened like at 3:30, I think you would have had a nice push up. But even still, at 2:30, that's kind of a late day C up. And I actually expected a little bit more follow through to that. And I guess people were not around today. It's Friday. So anyway, that is going to do it for today. Hopefully you've gotten you understand my tweets this morning. You understand why they failed. You understand the whole system. Okay. All right, that's going to do it for today, and we'll talk to you on Monday. See you later.